Hey everyone, welcome back to Corporate Decoder. Today we're diving into some financial dealings, and let me tell you, it's not always sunshine and rainbows. Sometimes companies shuffle things around like they're playing a shell game, but we're here to follow the P. Nuvectis Pharma just filed a Form 8K. Essentially, this document announces important events that could affect investors. In this case, it's all about how they're raising money, they're setting up a new way to sell shares, and at the same time ending an old one. Seems simple, right? Let's see what this means. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss with other investors and provide your own insights. First things first, this is a Form 8K filing which companies use to tell investors about big changes. Think of it as an oh or ta-da moment depending on the news. This one was filed on May 9th, 2025. Scroll establishment of at-the-market TED offering program scroll. Now let's get to the meat of the matter. Nuvectis Pharma is setting up something called an at-the-market offering program. This is a way for them to sell shares of their stock over time directly into the market. It's like putting your house on the market and selling it piece by piece. To do this, they've partnered with a company called Leerink Partners. Leerink Partners will act as the sales agent, helping Nuvectis sell these shares. Think of Leerink Partners as the real estate agent in our house selling analogy. Kroll common stock for an amount up to $60 million under the sales agreement scroll. They plan to sell up to $60 million worth of their common stock. That's a significant amount of money they're hoping to raise. The term at the market offering means they'll sell the shares at the current market price. This can be good because it avoids a big single offering that might drop the stock price. Here's a key point. Leerink Partners isn't required to sell any specific amount of shares. They'll use their commercially reasonable efforts, which basically means they'll try their best, but there's no guarantee they'll sell everything. Of course, Leerink Partners isn't doing this for free. They'll get a commission equal to 3% of whatever they sell. So if they sell $10 million worth of shares, they'll pocket $300,000. The company also promises to protect Leerink Partners from certain legal issues that might arise. This kind of protection, called indemnification, is standard in these agreements. There's a standard disclaimer here. This announcement isn't an official offer to sell the stock, and it's not allowed in states where it's illegal to do so before registering the offering. Basically, they're covering their legal bases. If you want all the nitty-gritty details, the actual sales agreement is included as an exhibit to this filing. It's the legal document that spells out all the terms and conditions. The company's lawyers, Alston & Bird, have also issued legal opinion about these shares. This opinion confirms that the company is legally allowed to sell these shares. Scroll termination of prior at the market TED offering program scroll. Now here's where it gets interesting. At the same time as setting up this new offering with Leerink Partners, Nuvectis Pharma is ending a similar arrangement they had with another company. They're terminating their at-the-market offering with H.C. Wainwright & Co. This earlier agreement allowed them to sell up to $40 million worth of stock. Under that previous agreement, they actually sold about $18.6 million worth of shares, so they didn't sell the full $40 million they were authorized to. The good news is that ending this previous agreement doesn't cost them anything extra. There are no penalties or termination fees. So what does all of this mean? Well, Nuvectis Pharma is basically switching horses midstream when it comes to raising money. They're ending one agreement and starting another, hoping to raise more capital. Now, let's step back and look at the bigger picture. Why is Nuvectis Pharma doing this? Well, biotech companies often need cash to fund their research and development. Developing new drugs is expensive, and selling stock is one way to get the money they need. The fact that they switched from H.C. Wainwright to Leerink Partners might suggest they were unhappy with the previous arrangement. Maybe they didn't sell enough shares, or maybe they got a better deal with Leerink. However, whenever a company issues new shares, existing shareholders get diluted. It's like adding water to a glass of juice. There's more volume, but the juice isn't as concentrated. So while the company gets more money, each share represents a smaller piece of the pie. Also, relying on at-the-market offerings can be a sign that the company is struggling to find other ways to raise capital. It's not necessarily bad, but it's worth keeping an eye on. Overall, this filing tells us that Nuvectis Pharma is actively managing its finances and looking for ways to fund its operations. The switch to a new sales agent could be a positive move, but it's important to remember the potential downsides of issuing new shares. Alright, that's our breakdown of Nuvectis Pharma's latest filing. What's your take on these moves and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.